What's up, investors and my talk family? Welcome to yet another video. In today's video, guys, we're going to be discussing an OG stock that we used to love covering on this channel from the launch of this channel, actually. All right, guys. So if you were one of the Mindmed viewers that used to watch my channel about a year ago or so when this channel actually launched, make sure to hit the like button and also let me know you've been down here, you've been around, and how have you been? How have you been? I know Mindmed hasn't been necessarily doing the best, but we're going to be talking about more in this video. All right, guys, I'm going to be talking about the massive analyst rating that Mindmed got that has sent the stock going parabolic up over 20% on the daily. And I'm going to be explaining, unfortunately, why personally, I believe that this catalyst is going to be short-lived and there's going to be some more red days ahead of Mindmed. But of course, we're also going to see the silver lining in that, and we're going to explain why also that is going to be somewhat of a good thing. And one thing that we have that a lot of other stocks actually don't have when it comes to the stock market right now. So without further ado, let's get this video on Mindmed started. Okay, so there's something I need to talk to you guys about. I know this is not the Patreon, but however, do check out the Patreon. The trailers are now only $5 a month, and it does also comes with an exclusive Discord community with a lot of like-minded investors. I mean, $5 a month, guys. Come on, that's like literally 2 cups of coffee, and you get the best trailers in the game, right? For example, just an example of a trailer that we did literally a couple days ago, right? We told our patrons to buy Snapchat before earnings. Soon after, Snapchat was up over 60%. All right, guys. So if you guys are interested in the trailers, make sure you check it out. The link will be in the comment section. But what I'm going to talk to you guys about actually is importance of financial freedom, right? And this is something that you guys understand if you're someone that has been invested in the stock market and is trying to make money outside of the casual, usual 9-to-5 route. Now, what am I talking about? Well, about a month ago, guys, we partnered up with an organization called the Financial Freedom Book Club. Okay, so if you guys are interested in learning more about financial literacy and personal finance and actually how to build wealth, right, and you want to get this information from some of the best authors that there truly are in the whole world, okay, make sure you guys check out financialfreedombookclub.org or .com, all right, guys, whichever one you like more. And use code MONEYTALK at checkout. Now, what does the company do? What does the organization do? Well, basically, they hand select and they ship out a book regarding personal finance and financial freedom every single month to their community members. And they also hold bi-weekly Zoom meetings where they go over the data, right? Where they go over the book and they basically go, okay, what have we learned this month, guys? And alongside sharing the knowledge with other peers, right? It's an amazing, amazing place to network with a lot of other like-minded people who are also seeking financial freedom and ways to make money outside of the 9-to-5 route, okay, guys? And I actually also sometimes host, that's right, I host some of these book club meetings. How crazy is that, right, guys? So make sure you guys check it out, guys. The link will be in the comment section. Use code MONEYTALK to save 10% every single month on your monthly subscriptions. I mean, in a year, that is 120% saved using the code MONEYTALK at checkout. And also, check out the Patreon again. Okay, now let's get talking about Mindmed. Mindmed. Well, Mindmed is up almost 30%, guys, actually over 30% now since Friday when the analyst came out with a buy rating and also an $8 price target. Now, what is going on to Mindmed though? However, the stock, regardless of this good news, is down still 50% just in the previous 6 months alone. But it's important to understand, I keep saying, but however, it's important to understand that this red that we're seeing right now has almost nothing to do with Mindmed, and it actually has to do a lot more with the macroeconomics of people being scared of interest rates going up, right? Inflation is rising, so people are scared of interest rates going up. And that's why we're seeing this massive sell-off across the whole market, right, guys? So this is very, very important to remember because as we know, markets always recover, right? So stocks fall and stocks lose value because of 2 reasons. One of them being that the company does bad, the company loses value, the company has bad product, the company does bad earnings, blah, blah, blah. The company does bad, okay? Stock goes to zero, company becomes a penny stock, out of here, okay? That has happened. That has happened multiple times in the stock market. Now, the second reason why stocks fluctuate and they're volatile and they go down or up is the market. The market, right, guys? Now, what am I talking about? I'm talking about the whole market, baby, okay? And in this case, the markets fall too. The markets fall, the markets have ups, the markets have dips, right, guys? But one thing that's important to remember, markets always recover, okay? So unlike the stock that is just out of here, markets always recover. So if your company that you're holding is down simply just because of the macroeconomics, you must hold, okay? You must hold, and you should not just give up on the company yet, all right, guys? Because like I said, right, the market always recovers, and every single bear market, right, meaning red stock market, is followed by a bull market, meaning a green market. Okay, so keep that in mind. And that this doesn't mean the market just recovers. No, this means the market 2x's after its recovery. Okay, guys, so keep that in mind. And if you guys love Mindmed, and if you loved Mindmed at $3 a share, there's absolutely no reason in order for you to not like the company at simply $1 a share, right, guys? Because the stock market is the only place where when things go on sale, people panic. If I told you, if you want to buy these glasses, right, you're like, oh, I love those glasses. They make me see. I get to see so much better. And they got gold rims. I love them. For $100. You want to buy them for $100. You go to the store and all of a sudden, they're 50% off. They're $50 now. So what do? Do you go, I don't know. They're looking a little bit cheap now. I don't know if it's really worth it now. It doesn't look too good. No. You're going to go buy these freaking glasses. You're going to go buy one for when you break these. You're going to go buy one for your mom who doesn't even need glasses. You're going to buy one for your aunt who doesn't even need glasses, right? You're going to buy it because it's even cheaper than what you were willing to pay for it, okay? So keep that in mind, guys. Now, am I saying that this is the bottom? And that's what we're getting to, right, guys? That's why we're getting to. Now, the stock is up 30% in the previous 3 days. But however, I do believe that this isn't going to last long. Now, why do I say that? That's because of the catalyst that we have upcoming. On February 10th, guys, the inflation data is coming in, and inflation is basically why everything in the market is in a frenzy right now, okay? Because in order to battle inflation, the Federal Reserve, aka Jerome Powell, needs to raise interest rates to battle this, right, guys? And basically, when interest rates go up, the whole market just goes right? And the whole growth sector, super risky stocks are just now in the dump, and people move towards more safer options like large caps and etc. Right, guys? So that's why we're seeing what we're seeing. And on February 10th, when we get the CPI data that's coming out, aka inflation data, this is going to play a major role as to whether or not Jerome Powell, aka the Federal Reserve, is going to raise interest rates once more, right? And if he decides to raise interest rates again, then the market's going to flip upside down, okay? And we're going to see a whole lot more red. Now, is he going to raise interest rates? What do you think, Money Talk? Well, the inflation, the CPI is expected to rise another 0.5%, all right, guys? Now, why is this expected? Well, this is because the sectors that play a heavy role in how the CPI data is measured, the prices in those sectors have been going up, okay? So CPI is going to look a little bit worse. Now, what did Jerome Powell say when he was asked whether he's going to raise interest rates again or not? This is what he said. He said that he's going to go by the data. He's going to go by the data. Now, if the data is increasing, what does that mean, guys? That he might have to raise interest rates, right? And when he comes out and says the news, I'm raising interest rates, the market is going to go in a frenzy, right? It's going to be shocked. It's going to get shaken up. And unfortunately, we're going to see a couple more red days, or a whole lot of more red days. Not that many, honestly. More red days, at least, for Mindmed, right? But here's the silver lining. Here is the silver lining in all this. And this is something that Mindmed has an advantage of over a whole lot of stocks in the market. That's because Mindmed at least has somewhat of a floor. Okay, somewhat of a floor, somewhat of a kind of bear market support level that it could bounce to, right? What is that level? Well, that is going to be the 90-cent level, right, guys? The 90-cent level that it hit in late January, okay, guys? So, and that is 40% away from the levels that we are at right now. I know that sounds crazy. 40% drop, Money Talk? Are you crazy? You're talking about, but I know that the Federal Reserve is going to most likely come out. Okay, now when I say I know, I think, okay, let's put it that way. I believe that the Federal Reserve is going to come out and raise interest rates again, which is going to cause us to go in another kind of volatile moment where the market is crashing somewhat, right? Now, and in those moments, the stock could potentially fall below $1 again. Now, should you be buying at these levels, and is 90 cents the lowest it could go? Absolutely not. It could go down to 50 cents, right? Depending on how the red market is. But 90 cents to $1 is a good entry price for this stock, because we know that every single bear market is followed by a bull market. And you're never, ever, this is another thing that we teach to our patrons, right? Is that you're never, ever, ever going to get the full candle. You're never going to enter exactly at the bottom, and you're never going to get out exactly at the top. And there's a saying that goes, bears make money, bulls make money, pigs get slaughtered. Okay, so don't be a pig, and understand that, look, if I buy at 90 cents, it could go down to 80 cents. Okay, it could go down to 70 cents. But how much lower is it going to fall from these levels that it's at right now, right? Right now it's at $1.30, guys. So in order for it to fall to 70 cents, it needs to almost drop 50%. Now, could the company drop 50%? Absolutely. But like I said earlier, right? It's your entry price and you're never going to get exactly at the bottom. Okay, so keep that in mind. If you get in at $1, the company has, according to the analysts, with an $8 price target, it has an 8x, okay, and 900% growth opportunity versus a 30% risk. Okay, so with that being said, guys, keep that in mind and let me know, like I said, right, have you been around since the early Mindmed days or not? Okay, leave a comment down below. And thank you for watching, guys. Happy investing once again. Check out the book club. It's called the Financial Freedom Book Club.org. And also check out the Patreon, guys. $5 for the most fire calls there possibly could be. Thank you for watching, guys. Happy investing. Money talk.